Good evening, everybody. This is Amazon 60-minute intraday hourly chart. You can see here that we gapped up today. We consolidated. We did not break lower. We went straight up. It was a $40 move higher. And that is why bear trends make so much money. And big sell-offs give us these opportunities. And by understanding the power of an oversold condition, a gap up, a 60-minute consolidation, and a huge, huge breakout. These trend lines that you see here where these arrows are, they're coming off certain points. One of them goes off right there all the way up to that arrow. Another one comes off this low right here and it goes right up through that channel just the way that it should. And there's that arrow. Right now, this 60-minute is below that arrow. And then when we take where the breakout was on the corner of that arrow, that goes straight up to 1832. We come down on that low intraday wick on a 60. Oh, yeah. And it comes out right there. So this is what Amazon did today. Now, here's the most rewarding thing in life. This is an $1,800 call chart on Amazon, which was at the time at the money. $12.50 was the low. 99% of the people who trade options have never seen a call chart or put chart, nor would they even know how to use it with the actual intraday stock chart so that they can get these big gains up here. And this is 60-minute candles here. And we went from 12.50, which was wholesale bid. We would put you in that trade, $13, $13.50, 60-minute intraday, breakout, the high, $35. That is a 60-minute, $1,800 strike option call chart. This is what it did. 99% of option traders never used the call charts or put charts. They basically are gamblers in markets and whatnot. We're here. We're going to be given a 2-hour workshop, which we would like everybody to attend. So back to this. This was the Amazon trend. What a great day it was.